Hello and welcome to the First Time Founders podcast, the show where we talk about how to take a business from nothing and grow it into something meaningful. Today we're talking to Rob Dumbleton. Rob's one of my good friends. He's a fellow early stage entrepreneur that recently exited. We used to have monthly calls through the depths of the coronavirus crisis when I, and a few of our other founder friends running relatively small businesses with big aspirations were figuring out how the hell we could deal with all of our customers being closed and our people having to go on furlough in many cases, while still trying to keep our investors on side and plan for growth to make sure that we were successful on the other side of that terrible market turbulence. Rob was an Accenture consultant before he stepped into entrepreneurship. He's a really bright, thoughtful guy, and I really think you'll enjoy this conversation in which we talk about the art of go-to-market. Rob's obsessed with understanding customers in order to be able to apply data insights to know when to scale and how to scale and where to focus your limited resources as an early stage founder on the best opportunities that are most likely going to create growth momentum for you. He also talks a little bit about what it was like being a founding CEO that was then acquired and had to find a new role in a bigger business, which I thought was really interesting. So without further ado, I really hope you enjoy this conversation between me and Rob Dumbleton. Dumbleton, welcome to the First Time Founders podcast. Thank you for doing this, my friend.
No problem, Rob. Great to speak to you, mate. And we're matching as well. Look, we've both got the obligatory black crew neck t-shirts on, right?
Exactly right. This is the recently exited First Time Founders uniform, or the or backups for Westlife, depending on which way
Yeah,
you look at it.
yeah. I don't fancy my chances in any sort of boy band, mate. Not at all.
So listen, before we start talking all about inside baseball, because we've known each other for a long time, should we bring the listeners and what viewers up to speed on how we know each other and what your journey's been? I mean, I'm boring people endlessly with mine, but it'd be great for folks to hear how you got into the startup game. You know what your startup was and ultimately how you landed it safely.
Yeah, of course. Yeah. Well, I met I guess co-founder Chris Lloyd, who was highly technical. I'd had a startup previously in the B2C space that did terribly, just a complete car crash of a thing. But you take these learnings and you move on. But because I'd done that, of course, there was interest in my experience with him and Chris Lloyd. For those of you who don't know, he's a genius in terms of technology, engineering, coding, all that kind of stuff, and um, uh, also video streaming. And that was our initial space that we got into, just because that was his technical background, and I'd done a lot of enterprise consulting. So we decided to kind of start what was 27 partners at the time, and there were a couple of other people involved, but mainly us two. And working with big enterprise clients to do video distribution. And of course, as you solve that kind of distribution challenge of how to get video across restricted bandwidth networks, internal networks, you need to surface it somewhere. You need a nice UI UX. Of course, software is the obvious choice for that, to get it onto mobile, get it onto desktop. So we started building these kind of enterprise grade communications platforms for the likes of Sab Miller and Unilever, and did a lot of consulting, and started then to do, or the scales tipped in terms of consulting revenue on into SaaS revenue, because we were selling our platform and licensing some of these platforms over and over, and won contracts with McDonald's and some really big customers. We thought, oh, this is it's nice to have some revenue up front versus try and fill seats with billability and utilization of consultants. So we kind of went through that organic growth journey from 2012 to 2019, when we thought, hang on a minute, if we're going to really make this a goer, we've got to do SaaS, and decided to flip the business from a consultancy hybrid agency software business to a pure SaaS business. And we ran out for funding in 2019, got institutional funding in late 2019, and then geared up for our big product launch in uh, March 2020 to the learning market, and of course late March, April, COVID hit. So all of our best laid plans, we had to completely revise because it was all frontline learning platform. It was a frontline learning platform play. So, blue collar workers out and about, airline staff, manufacturing staff, all that kind of stuff. And of course, everything went, lockdown. So we had to pivot, work out kind of where what our next kind of strategy was in that environment. Managed to survive COVID, and then I think rather than roll the dice again and get more funding to go for that kind of next kind of step up, we decided to go for a trade sale of the business. And in 2022, where are we now? Yeah, 23. We 21. We sold the business in June 21, and to a health and safety software company that had a big gap in their product. They didn't have a good learning offering or content delivery offering as well. And that just has gone fantastically. And we that combined business, then exited about 8 weeks ago. So it's been a wild ride journey of kind of selling my own business, and then exiting a bigger business that we managed to contribute significantly to in terms of that success. So it's been fantastic, really has. Learned so much as well, which is great.
It's an amazing experience, and of course, you and I had. How often would you say we caught up, kind of through the journey, and our little sort of founders therapy
Yeah,
sessions, trading
yeah,
strategies and
yeah,
tactics, about sort
yeah,
of monthly or so, wasn't it, for a good
yeah.
couple of years through COVID?
Yeah, though definitely through COVID, we all needed just a shoulder to cry on, and then I think, yeah, and then I think we that was very therapeutic, actually, having you, Joel, Luke,
Yeah.
us four kind of just I remember some of those calls, like, what the hell is going on, kind of thing. What do we do? What's everyone thinking? Furlough? Shouldn't we? All that. Just advice was great, and just to share that was fantastic. So yeah, it was about every month, and then you and I have just, I think, kept in contact. We've just got a shared love for B2B. Well, I don't know about B2B SaaS necessarily, but I think founding businesses and that whole world. But I was trying to remember this as well. I can't remember how we actually met in the first place, because that must have been donkeys years ago that you and I met. I can't remember
Yeah,
how.
well,
If you
yeah,
can.
I can't remember. I think I think we were introduced to a mutual connection because we had sort of similar backgrounds, didn't we? In that we'd both come out of professional
Corporate.
services.
Yeah. Yeah.
I mean, you're just always just a little bit better than me at everything. You played rugby a bit better than me. You're tall. You're a bit taller than me. You were actually not slightly bigger professional services firm. You were at a much bigger professional services firm. So
Yeah.
I always felt like Danny DeVito in Twins after we were introduced.
It's not far off. It's not far off. Yeah.
So, I mean, Rob, I talk about our background a bit, but and you've alluded to your to Chris, the sort of technical wizard in your business. Do you want to describe a bit about like your role specifically in terms of how you think about what your contribution was?
Yeah. No. Sure. Yeah. So I guess I was about to say I played the role of a CEO. I was the CEO of the company. Uh, we both led the company, right? We both made decisions, but I think based on, in fact, kind of how you say it, like the kind of my character attributes are more geared towards sales and running businesses and operations and that kind of stuff, than technology. And obviously that's where Chris had a natural groove, and I think that's where, in my opinion, a lot of startup businesses, I think two heads is better than one in that space as well. So to have a clear delineation of responsibility, that one person kind of is an out and out sales led, or has that kind of operational running of the business, good with numbers, attention to detail. Not saying that Chris isn't all those things, but then having another person who is kind of super tech focused, tech savvy, can create a product that's absolutely killer, from a B2B SaaS perspective, and from a software business perspective. I think that's kind of the kind of the magic combination. But yeah, I did my best to play the role of CEO, and obviously that involved running the business, having overall responsibility for staffing, for setting strategic goals, objectives of the business, for meeting with the board and shareholders that we had, because we had outside investment, so updates, board papers, CEO reports, that kind of thing, lots of recruitment and hiring, and just generally making sure that we're headed in the right direction in terms of our strategy. But that's the bit I wanted to talk about today, the whole strategy piece, because I think that's the bit that in hindsight could have done a lot better with. But yes, that was my role.
And I also want to get into that because I think it's really interesting. Before we do that, would you then mind talking a little bit about what your role was post acquisition? I think that would be useful. I know it's a bit sort of back to front, but I think it would be interesting for folks to hear what your most recent role was like, and then we can spend the rest of the conversation talking about the
Yeah,
highs and
yeah,
lows and lefts and rights of being a
lefts and
CEO.
rights, yeah, ups and downs. Um, so it's going in as we were a small business. Okay, so we had at our peak, I think we had about 25, maybe slightly more in terms of FTE. When we came to sell the business, we'd stripped it all the way back. Had seven, I think, individuals that moved over into the new business. So as an inexperienced person going into the scale up world, which the business that acquired us was, I'd only really done the startup world. Um, Going into a very experienced business with a very experienced leadership team as a CEO who's run their own business is very difficult. Well, I found it to be very difficult, and lots of people gave me this advice before this happened of, you're not going to be the only game in town anymore. You're not going to be the person making decisions. There's already a CEO there, and they've got, infinitely more experience than you have, in terms of career and, taking businesses on that journey. And of course, as you go there, you think, yeah, but I'm going to really get in there, and hopefully, it's going to, I'll make a massive contribution on that leadership team. But actually, that leadership team at that stage of business has already been structured in such a way that it is, high performing. Everything's kind of, every piston's firing. So, not perfectly, of course, but nothing is. And all of a sudden, you're bringing another group of people into that mix. It's very hard to then integrate those individuals into that existing structure, because they've just got to keep. You can't stop. You've got to keep on going, right? So I think as an incoming CEO into that world, you've got to make sure that your business is integrated correctly. And you've done this, you've been through this. You've got to make sure that
Yeah,
the acquiring company knows your product inside out. They can support it technically, but then sales team can actually sell it, right? And it's got enough of a compelling offering, a combined offering into the existing product stack, that it makes everything, not twice as better, but 5 times as better with that combination. And that takes a lot of sales enablement. There's a lot of upskilling, knowledge exchange that happens both technically, but then from a, why are you selling this thing? What are you selling, and how does it apply to situations that your customers are already talking about? So me understanding the market, me understanding the customer base, but then their sales team, or our sales team, marketing team, implementation team, really understanding what the value prop is of the product we're bringing into the mix. So that's number one. Get that done, ticked. Right, that takes time. It always does, because you don't want to disrupt what's going on, because there's numbers to hit, etc., etc.
of
And then I
course.
think you got to find, like, where can you then add value? And I kind of identified a gap in capability, and capacity somewhat in the whole kind of sales analytics operations space, where actually I
Hmm.
could add a lot of value in terms of identifying, really drilling down on where our ICP was in each region, and actually what the size of the obtainable market was within those spaces, looking at individual sales people performance based on, time to close, the kind of classic sales velocity metrics, and how you look at a combination of value, volume, time to close, and conversion rates, and then you start to actually coach based on insight versus just coaching. So I created this kind of sales strategy, analytics, insights, testing the hypothesis of our go-to markets, of our kind of scale up methodologies, to say, well, actually, are we doing the right thing globally? Should we be treating different markets in different ways? And that role was kind of coined VP of growth, because it was all about high growth stage. I think we were plus 10 million ARR upon acquisition, and when you're of that size, that scale, things are very different. There's a very different way of doing business. It's all process driven of how you get that repeatable motion in all functions of the business. Whereas early stage businesses, it's more about finding product market fit and go to market fit, and kind of reiterating that on a cycle. So yeah, VP of growth was my last role.
Well, that was what I was going to ask you actually. Do you think that part of the reason it's difficult as an incoming CEO of a really early stage business to a bigger business is because that early stage CEO, you do a bit of everything, don't you? And I suppose when you go into, I mean, I'd be interested in your view of the exec team at that 10 million annual recurring revenue stage. Is the point that everyone's got specialized roles that you haven't necessarily seen because the business that you've just presided over kind of needed you to do 30% of all of those specialized
Yeah,
roles, but didn't need anyone to do 100%.
exactly. You're a jack of all trades when you're a founding CEO. You have to do absolutely everything. Customer success calls and all that kind of stuff. Whereas I think this is where a bit of self-reflection and self-awareness of actually my what I need to do better now as an individual is to build a more effective team around me to make me more successful, right? Whereas previously, and through lack of observation, I thought, well, it all has to be me, right? This is mine. I
Yeah.
only I can do this, and it's like that's not the game, right? What you've got to do as a scale up CEO, and where our CEO did a really good job, was building those pillars of expertise around him, people who are really strong in their domain, so that they could collectively agree what their objectives and everything was, but actually there was all of the doing, or most of the doing, was done by those functional experts, not that individual. So there was time, space for him to focus on, you know, skating to where the puck's going to be next. And I think that's the difference. You're so under it with all of the minutiae when you're a founding CEO or a founder of a company, that you kind of you don't have that freedom, that space to think about what's next a lot of the time. Um,
Yeah.
and I think that's where people just become completely, all consumed with everything, and actually you try and do everything, but you don't do anything particularly well. You just try and do everything.
I definitely found the same thing. I mean, one of the you and I have obviously talked about this offline. You very kindly give me advice as I'm thinking about the next chapter of my career in life, and part of the sort of part of my process has been to work out what is it that I learned from the Yapster journey, going from sort of lawyer to start first time founder, and then trying to codify that so that I can sort of process my own learnings and also feel good about continuing to get value for the rest of my life from that experience by sharing it with others. And as you know, where I've sort of landed is that there's there's no one size fits all for how you build a company, but there is a framework for the 0 to 1 stage that is helpful. And you can either use this framework or you can have your own framework. But having no framework is fairly dangerous. And as you know, we talk about finding message market fit, which doesn't require any product, finding product market fit, which requires you to be able to actually deliver on the promise of the message you sold, and then, of course, scaling up the organization. And it does seem to me, I'd be interested in your view. I think part of my struggles at Yapster, even though it ended up being an okay outcome, was because I sort of jumped to try and scale to satisfy investor promises that I made in good faith
Mm.
that were just made way prematurely. Like if I'd have found really tight message market fit and then really tight product market fit, the organization would have been healthy enough early enough that I would have had the resources to then focus on building a team. Whereas when you try and scale before you've got the fundamentals, you're scaling without adequate resources to actually do the job properly. Is that a fair summary?
Oh, absolutely, no, totally. And no, there is the beauty is that people like you and other winning by design methodology. Some great stuff out there. I've just done CRO school on Pavilion as well, and it's all about this. There is now a school of thinking around this that people are becoming more aware of, but no one teaches you this stuff. And you go for investment, and
You're right.
there's also a lot of those individuals are accountants. They're not. Yes, they've done businesses before and they've seen stuff, but actually, do they really understand the stages? And I think actually it is quite simple when you break it down, and you can't skip a step, right? And
No.
exactly how you've just described it: product message fit, product market fit. I think the other probably area or to start to segment is your go to market as well, because that's a separate space. And then scale up. Scale up's all about repeatable processes. Um, Go to market somewhat is, but more strategic of, well, do you sell to enterprise? Do is it different nuance per market? In which case, how do you
Hmm.
then take that two-stage selling, field sales, all that kind of stuff? But the important bit is not to skip a step and to always come back and reiterate. So every time you build a new feature, you've got to make sure it fits the market, and then you've got to assess whether or not that's taken your product from a mid-market sale to an enterprise sale, in which case it's a different go-to-market strategy that you've just done through a product. And I think a lot of people try and go from, yeah, we've won 5 6 customers, maybe a few more, there's obviously a need for this, right, let's go scale, let's bring in loads of salespeople and sell. Biggest error ever, right? I think
Well,
the
I did that. I mean,
same.
I added 10 salespeople, burnt tons of capital relative to what I
Oh,
had available.
it's absolutely nuts. And I think there's some great kind of the Winning by Design guys talk a lot about, what the tipping point is between founder-led selling, i.e., what can you
Mm,
physically, and there's it depends on if you're a volume-based seller, or actually you're looking at higher value, in which case volume's lower, because then you just can't. One person can't accommodate volume, but you can at the higher value stuff. So if you're selling to bigger businesses and your ACV is about 50k, you can do founder-led selling up to 5 million ARR quite
yeah,
easily.
totally,
Quite easy. And
totally.
actually, on reflection, yes, you could, as long as you've got the supporting functions beneath you. So rather than bring loads of salespeople in, because also the game's changed, the market's changed completely in terms of selling, and especially in the SaaS world, right? Now it's not about just going outbound, calling people, cold calling, and they're, oh yeah, I'm interested in this because it's new technology and I want to look good in my business. Lots of businesses have now got SaaS platforms. They're quite happy with what they've got. They're just trying to kind of tweak it so it makes it even better.
Totally.
So it's more difficult. Buyers are more educated, right? So you have to play to what the market's doing, and that is about content, right? That's about getting, because people are consuming like this kind of
Hmm.
stuff. Hopefully, this kind of stuff they're consuming. And they're becoming more educated as individuals before they go in to make a purchasing decision. We do it in the consumer world. We don't go and get sold to. Rarely do we do that. We do our research. We have a look online. We shop around, and then if we're ready to go into a shop or wherever it might be, if people still do that, go into shops and buy stuff, then you kind of know what you want already. You know what the benefits are. You don't need to be sold that. And that's where the B2B market is going, in which case you need to think then about generating demand, not just capturing it, because there's a very small percentage that are ready to buy. So it's about creating that kind of warm brand educational content layers where people trust and understand what it is you do and what you can do for them, and then hopefully they'll come in and as a lead, go through that funnel, get qualified by someone who can say, actually, yeah, I need to understand you a bit more as a customer to see if we can accommodate that, because we're not going to take the risk on any bad business because it has no longevity. And I think that whole process of investing in the top of the funnel first, before you then try and get loads of salespeople in who are trying to close pretty crappy leads, pretty cold leads, is not what you want. You want to create that warmth, get that intent high, and then founders can convert that until you've got to that scale where hopefully your customers sell your product to other customers or prospects that you want to acquire.
Why do you think we all skip through the stages? Like, why is it so endemic?
Well, in terms of just like hiring salespeople.
Like, yeah, just why do we all rush through the stages? Like, because I remember you and I were super thoughtful about how we were building our businesses, right? Like, it's not like we weren't vociferously consuming information,
mm,
coachable. Like, I mean, you're very self-effacing. I like to think I'm occasionally humble. Like I admit to making mistakes. I admitted to making mistakes all the way through the journey. So
Mm,
I I don't really know why I made that particular cock up, and so did you, and so do so many smart people that I know. The only conclusion I can come to is that the sort of VC industrial complex is entirely geared towards finding breakout companies, and it just isn't really worth their time talking about the ugly duckling 0 to 1 stage. It's like the music industry is geared towards working with talent,
mm.
not teaching people that can't sing how to sing. But I don't really understand why it is that none of us knew this stuff.
Yeah, well, I think when you're at the go-to-market stage, you certainly need to scale your sales teams, right? You can't
Totally, yeah,
do
of
the
course.
founder-led stuff. But if we're talking about the 0 to 1, um, I think it's this. There's an old school train of thought, isn't there, that a salesperson can come in and can make something happen that otherwise wouldn't have done, right? And I think the
Hmm.
market dynamics have completely changed in terms of um, you know the people who have been in businesses now for 10 years, right, who started 10 years ago, who wouldn't have bought technology, are of the generation that they're just thinking about technology the whole time. And now they're in a position to start buying technology. They're far more educated, right?
Right.
They're probably more willing to buy, through a kind of on a transactional basis through a credit card on a portal than they are to meet a salesperson, to be schmoozed, to go through that process. It's quite an old school way of doing business. I'm not saying people don't buy from people; they absolutely do. Still, right? You
Yeah, of
still
course.
need to have that layer in there. But I think at the 0 to 1 mil kind of phase, I think again the focus is not on um, it's on attracting leads. It's not on going necessarily about hunting them. I think you need to prove that you can,
Mm.
through your outreach, right, through your brand, through your, because these are all the kind of the tick boxes. Is your brand appropriate for the market you're operating in? Do people understand what your product does without someone talking to them, right? In which case
Right.
you've addressed a need right there. Right, there is pain. Are people searching for it? All of these kind of early warning flags that would go off in someone's mind. You don't need someone to necessarily go out and try to be selling that stuff. People can go and find it themselves. And I think that proves that there is appetite there without someone saying, we need to find appetite, we need to create appetite. And of course you need to create a bit of drive, otherwise no one would ever do anything. But I think that's probably why um, that kind of old school way of thinking of, well, we've been really successful in this £10 million business because there's loads of salespeople. Well, can't we just do that for a 0 to 1 million? No, they're
No, it
completely
doesn't work,
different
does it?
businesses. So yeah.
Do you think it's because do you think investors have a role to play in this, the sort of seed investors and founders also? I mean, I again reflecting on my own situation, we won a few really good customers early. I now recognise that that wasn't as a result of repeatable process. Like in many cases, we just stumbled across bleeding edge early adopters that happened to
Mm,
be working in some fairly big referenceable brands. I then went out and raised money. I didn't tell any lies, but I told the investors about these early stage customers and the logos. I thought that they were going to be repeatable. The investors then understandably concluded it was going to be repeatable. And I suspect that's what then sucked me into try acting like it was repeatable when in actual fact all of the evidence should have been saying to me, Rob, you haven't got crisp message market fit or product market fit yet.
mm.
Um, and I'm not enough of a sociopath to take the investors' money and then the next day just be like, thanks for the £1 million, guys, but actually this business is not ready to scale. I'm just going to keep your money in the bank for another year until it is ready. Do you know what I mean?
Yeah, no, I do, and I mean, look, all of us are trying to find our way, are learning as we go, right? That's why we get advisors and investors in, because they've done some of these things before, and good non-execs and investors will help founders who have passion and purpose, but not necessarily knowledge of the process you have to go through. But you know, yes, they know more than we will and be able to point these things out, but no one really knows. This is the
No.
thing. So your point on you had repeatability. You did. you'd sold it, like you said, you had brand recognition, you had you know repeatable customers who are paying multi-year contracts, who are buying the same thing, who had the same need, right? I'm going to come back to that whole needs piece in a minute, because I think buying something versus buying it for a particular reason are two different things. Because I think
That's
that
so true.
too many. In fact, let's tackle it now. I think too many people think because they've sold a product repeatable times that they've got a repeatable offering, right? They've got a repeatable product, but they've not identified why that person's really bought that thing. And that's the difference, is really understanding the impact that your product's going to make against the need, the job that someone's wanting to do, because it could be different in regions, it could be different in industries, right? In which case your messaging has to reflect that. You have to double down on the things that have the most acute impact, right? And that is all based on the customer, not what you've got to sell. It's what the customer wants to buy. Your product can have no functional changes, no code changes, absolutely, off the shelf, but you can market it as addressing lots of different things, because that's what matters. And I think a lot of people go down this route of, we've got this killer product that does this, 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 and this, want to buy it? And people are like, no, because I don't really understand how it's going to address my challenges and my pain. And we don't go into enough about what is it the customer actually wants to do. End of the line, what impact is this going to make at a business, and what can I use to, like, that's your repeatability, is a nice customer story again and again and again and again and again, not just someone's bought our thing. um,
I think that's right. I think particularly with the sort of very earliest stage early adopters, quite often what those early adopters have in common is they like new stuff and they like sort of riding shotgun with an entrepreneur. That's
mm,
actually the
mm,
thing they have in common. And you're right, they can get satisfaction from the purchase process, particularly if the price is low enough, which day one startups propositions usually are priced low or even free in many cases,
yeah,
pilots and the like. Um, Having 10 super early adopter customers is really useful for figuring out what you are,
yeah,
but it isn't necessarily repeatable because there just aren't that many lunatics in meaningful companies that are willing and able to take on products,
yeah.
particularly when you try and raise the price, which is why you suddenly can think you've got product market fit only to discover that you really don't.
Exactly. And I think that's where the expectation of any investor, that understanding those stages, the stage that you're really at as a company at that level, and what you're all going into next, is not automatically scale up. Actually, it's probably at that stage 0 to 1. Hopefully you have got message market fit, product market fit, because you've proven it with that many recurring customers, that you then think about the go to market. And the go to market again should be, well, where where are we actually going to promote this and push this? Who to? What are our personas? Who's bought this previously? Are we addressing the right impact? What does it actually do for the market? In which case, we need to uh, think about the jobs that align to that, uh, to those use cases, and try and identify other customers that have this challenge, this problem, and want to achieve this impact. Um, and I think that then it's about structuring that kind of top of funnel, middle of funnel, bottom of funnel, closing process, to make sure that it matches size of account. If you're doing six-figure deals, for example, you need probably pretty hefty salespeople to do cradle to grave. If it's 15, 20K deals, then you're going to need a two-stage sales process, in which case it's a BDR, SDR, and probably a founder still. And that's kind of all you need in that scenario. And I think that's the investment of proving that the go-to-market works. Because if you're in the wrong market, or if you're targeting the wrong people, then you'll soon find that out. And if that that little kind of micro sales process isn't working, then also you can discover that at that stage.
Yeah, I couldn't agree more. I think what's interesting is when you look at where the UK is relative to America, not only has America sort of been generating very successful entrepreneurs for a long time, and the UK, with particularly in the last sort of 10, 15 years with our own IPO, Beam has begun to do the same.
Mm.
There's also this other class of entrepreneurs, which I think you and I would be in, that have actually got, might not have IPO'd, but you've got a lot of really, you've got a lot of flying time to know this stuff. And so my sense is that the new first time founders coming through now have got a much wider selection of potential advisors to tap into, to help them really understand where they are, to be as honest as possible with investors, and
Mm.
actually also screen and get the right investors that aren't putting them under pressure to delude themselves into thinking that they're slightly further ahead in the journey than they are. I always thought it was laughable that the Americans were so comfortable to fund things for years with no revenue, until I realized how long it takes to mature certain types of businesses, and
Yeah.
why aggressively pursuing revenue prematurely is actually really harmful to long-term value. I always thought it was just go like
Yeah.
Americanism nonsense. I mean, it can be taken too far,
Yeah.
but done sensibly, proper seed funding where you're not turning on the revenue machine yet is absolutely the right thing to do, right? And that is not something people in the UK are generally very supportive of.
No. No. I think I tend to agree with that, and it reflects the maturity of the market, the SaaS market as well. I mean, I'm I'm going to forget dates here, and I'm sure people will point out that this is completely wrong. But Salesforce were the first ones. This is right. Salesforce is the first ones to create a SaaS market, recurring software as a service
Yeah,
market.
I think that's right. Or certainly the first to really popularize it.
Exactly, which is, I think, was only in 2010. I'm going to say. So it's not been too long, right? And I think the volumes that we've got, and I have done this research. I think there's 30,000 B2B SaaS or SaaS businesses globally. 2,000 in the UK, 2,000 in Canada, 20,000 in the US. Right, so that market, yes, it's a bigger market. It is 10 times as big, of course, but there's it's been around for longer. It's more mature. There's more volume that people can learn from, right? Make mistakes from um,
Yeah.
in the US, and I think that the pool is a bit smaller over here. And again, the you're right. I think the investments and what's going on, or what's been going on over here, we're trying to replicate that success in the US, the Silicon Valleys and things like that. But we're probably not just quite there yet, or have the experience. I think at an investor level um, to do that. But there are some great investors out there who just focus on this and have the methodologies and provide the right advice and things like that. I think are right for businesses like yours and mine were. Um, but there are others who are, their portfolios just, they've got ridiculous stuff in there that, there's no comparability. It's no different way of doing things, and then you lose that advice and that nurture and that steer that is really what you're accepting a loss of equity. It's not just the money.
Yeah, I totally agree with that. So, Rob, I know we're coming up on time. Before we let you escape, how can people reach you? What should people, if they're minded to reach out, what should they reach out to you about? And we can maybe put some links in the show notes to make it easier for people to get
Yeah,
hold of you.
sure. LinkedIn's obviously the best place for it. Not a connect, a message. I don't tend to connect with people I don't know. It should be your network, right? So why just have loads of people you don't know on there? So they can reach out using just a message on LinkedIn. I'm keen to help businesses at both startup and scale up stage to think about their go to market proposition and where they are, assess their as is, think about the 2B and the journey that they need to go on. So happy to have conversations with people about that, because I'm really interested in that. I'm really interested in the data that sits behind all of that and how you architect your processes based on insights gathered from data you've got. And there's so much data that people are underutilizing. It's unbelievable. If only we really mined and started to really analyze and splice and dice what we've got. I mean, be a different game. But then people don't tend to do that or capture the data in the right way because they just want to get a deal closed, and it's not actually take some time to really think about, why did someone buy this? Right? What was the driver? Because that's the thing you need to take to market, not the features and functionality that your product does. It's why people are willing to, essentially risk their career to make a purchase of a tool. It's got to be based on an outcome. Got to be good.
I couldn't agree more. And listen, folks listening to this, if you've got friends working in management consulting that will be quick to give you advice, for God's sake, call Rob. Like, he also works at Accenture, but actually has some flying time of his own to inform some of the stuff that goes in those pretty looking slides. Rob, thank you so much for doing this. This has been amazing.
Pleasure.
I hope we can lure you back as we get more and more subscribers to this thing.
Happy to, Rob. Thank you.